Hello everyone, welcome to our Let's Learn Futures webinar series brought to you by Bursa Malaysia Derivative Berhad, okay, and managed by LifeChamp. My name is SinChew. I am the moderator for this webinar sessions. I want to thank all of you for spending your precious time, precious evening to be with us this evening to learn about futures. Now, before we move on, I just want to check if my audio, visual, and webcam are doing okay. If you can see my screen, hear me speaking, and also see our webcam with me and the speaker together, please type yes in the questions and Q&A box. All right, thank you very much. Looks like our audio, visual, and webcam works perfect. Thank you so much for your response. All right, cool. So this webinar series is brought to you by Bursa Malaysia Derivative and managed by LifeChamp. And today we have invited a very young speaker, but very experienced in the area of trading. So he is none other than Jeen Hao. And I think this is the first time Jeen Hao speak on Bursa Malaysia Derivative webinar platform, I believe. So welcome Jeen Hao to our session. Okay, so today his topic is going to be increase your income with futures trading. Now, how many of you here wants to increase your income from with futures trading? Okay, please type, I want, okay, in the question box so I know your interest. Now, as you know, futures, the benefit of futures is you can make money in the bull market as well as in the bear market. So you can definitely make a recession-proof income if you learn how to become a full-time trader. Bull market, you make money. Bear market, you also can make money. So this is a two-way recession-proof income. All right, thank you so much for your response. Now, this webinar, we have a disclaimer, very important. And so disclaimer is whatever we present on this webinar, the speaker do not give any buy or sell call or any trading ideas to any futures that we discuss. So if you decide to buy or sell, long or short any positions, you do it at your own risk. Okay, whatever presented is only for educational purpose. So the moderator, neither the speaker or Bursa Malaysia is responsible for all your financial decisions. Now, so for the entire year 2020, Bursa Malaysia Derivatives, we have designed about 22 sessions of Bursa Malaysia Derivative webinar. Last week we did a session on Chinese one on FKLI, so this is the remaining 21 session for the year, and today you are attending the one that increase your income with futures trading. And next week on Tuesday we will have a Malay one, futures in Bahasa Melayu, yaitu pengenalan kepada pasaran niaga hadapan. Alright, so the entire year we have webinars in Chinese, in English, as well as Bahasa Melayu to share with you how you can trade futures and how you can make an income from futures trading. Now, allow me to briefly introduce our speaker today, and he is a trader in the capital market, trading equities and futures market, mainly Malaysia, US, and the Hong Kong markets. He is also the founder and chief master trainer of Street Finance. He also has his signature program called Street Trader Intensive Program, and he spoke very regularly for investment banks, universities, as well as private entities. Okay, he's also featured in media such as CITYPlus FM and Borneo Post. All right, so without further ado, let me pass over the presenter control to the speaker, which is Jeen Hao. Over to you, Jeen Hao.
Hi everybody. So let me click show my screen. So can everybody see my screen right now?
Yes, excellent.
Okay, all right. So without further ado, let's get started. All right. So if something happened in the middle, like the audio went off, please notify me, okay? Because I have no idea what's happening on the other side. All right.
No problem.
Okay. So, all right. Thank you. Okay. So let's get started. Now, a lot of people, whenever I tell them about trading futures, they will tell me something. It's like, I'm already making very great money in stock trading. Okay, and why should I look into futures, and why should I trade futures? Because whenever people think about futures, whenever people say futures, okay, the first thing that they will immediately, okay, relate is the kind of risk that is being involved. Okay, is being involved. A lot of people may say that it is very risky because they heard a lot of horror story and things of that nature. So that's the first questions that I want to answer. Okay, if I'm already profitable in trading stocks, okay, meaning that, for example, you're great in trading stocks, you made a lot of money from Top Glove, you made a lot of money from Hartalega, Supermax, Rubberex, or the tech stocks that are booming right now. Okay, why should you trade another instrument? Okay, because some people tell me I'm already doing well in trading stocks, so why should I look into other instruments? That's the first thing that I would like to address. Okay, so here's the thing. If you own and operate a cafe which sells coffee, and your business has been very great, okay, you make enough money to cover everything, and you make enough profit for you to spend and reinvest in your business. So how can you further increase your sales and profit? Because you're not going to open a cafe just to sell coffee alone and just like think that, oh, it's great enough, I make enough money. So how can you further increase your sales and profit? And I believe that the answer is very straightforward. Is selling other products that will not affect your main product line. Okay, so back to the question just now. If you're already profitable in trading stocks, so why should you be looking into trading futures? It is because it is an opportunity. It allows you as a trader to increase your income. It is an additional source of income. Okay, so I always encourage people to trade multiple instruments. Okay, multiple instruments, because like what Shan has mentioned just now, okay, you are able to make profit, okay, in a bear market. Okay, just like the recent flash crash we have in all around the world. Okay, if you know how to trade futures, you might be able to profit a lot from the crash. Okay, you might be able to profit a lot from your crash, or just sometimes you feel like holding your shares for slightly longer time. Okay, you want to hold on to a recession which may be too severe for your taste. You can actually trade futures to hedge a little bit of the risk. There are a lot of options. So today, what I want to share with you is to tell you what are the options that you have, and then you do your own due diligence and you decide which type might fits your trading style or needs. Okay, so that's the thing that I want to cover today. So let's get into some basics. Okay, what are futures? So there are one thing called futures market and another thing called futures contract. So futures market is a place whereby participants can buy and sell futures contracts. Think like a supermarket of futures contract. And what is a futures contract? By definition, futures contract is a standardized legal agreement to buy or sell an underlying asset like commodities, indices, at a predetermined price at a specified time in the future. Now, it might sound very complicated, but let me just put it in this way. Today, if I want to buy something, okay, from you. I give you the cash, you give me, for example, you give me the coffee. Okay, I give you the cash, you give me the coffee. That is what I call what's happening right now. Let's call that present. Okay, but I say, hey, this coffee next month it might become 5 ringgit per can. Okay, 1 tin, 5 ringgit. But the problem is I don't want to buy it and consume right now, but can I pay you the money first and then you only deliver it like 1 month later or 2 months later or 3 months later? Okay, I want to lock in the price as at today, but I take future delivery. So that's a situation whereby I want to enter a futures contract with you. So there is actually an agreement, a contract. But as a trader, we don't have to care so much. You just have to know that when the contract price goes up, you can make money, and when the contract price goes down, you can make money as well, provided you take the right direction. Because in futures, you can long and short. Okay, I believe most of you have already known that. But this is just one simple way to explain what is futures. And from a trader's perspective, you just have to know that when the price goes up, you can make money if you go long, and when the price goes down, you can make money by going short. Okay, and this is different from the IDSS in Malaysia stocks, whereby you have to cover back your short position by the end of the day. Okay, you can close the position, okay, after a few days or after a week. Okay, so there is different from IDSS. All right, so and all the futures contract are actually standardized. Actually standardized, and all this information you can find it in Bursa Malaysia website. So today I will use 2 popular contracts, okay, popular futures contract, okay, as an explanation and to demonstrate to you, because these 2 are the one that you might want to get started with, okay, if you're new to the futures market, okay, and these 2 have the greatest liquidity, okay. So the first is FKLI. So we want to understand the contract specification. So what I am telling you right now is the contract specification, and all these are standardized. So what is the underlying of the FKLI? Okay, the underlying of the FKLI is FBM KLCI, which is the index that everybody is familiar with. Okay, so every time you want to trade a futures, be it like FKLI or other, maybe you want to trade overseas, whatever, okay, look into the contract specification to understand what this futures is all about. So for example, FKLI, the underlying is FBM KLCI, which is our Kuala Lumpur Composite Index. And the contract size, it means the value of the whole contract is actually our FBM KLCI times 50 ringgit, because 1 point is worth 50 ringgit. Okay. Next, what is the price fluctuation? What is the minimum price fluctuation? It's actually 0.5 index point. Now, for KLCI, you can see the index is 1600.2 or 1600.15. Okay, but for FKLI, you cannot see that kind of pricing because it must move in a multiple of 0.5 index points. So which means you would see 1600.0 or 1600.5. The next would be 1601.0. Okay, so it moves by 0.5 index point. And the per tick value is 25 ringgit, which means 1 point is 50 ringgit. So per tick is actually half index point, okay, because it moves in a multiple of half point. So half point is 25 ringgit and 1 point is 50 ringgit. So that's why if you can see my cursor, okay, FBM KLCI contract size is actually the FBM KLCI times 50 ringgit, because 1 tick is 50 ringgit worth, okay. And then that's why when it comes to per tick value, okay, FKLI per tick is 0.5, so that's why it's 25, okay. If you don't understand this, let me explain in the most simplest term. If you buy or long FKLI contract, every point it moves up, you earn 50 bucks, 50 ringgit. And every every point it moves down or against you, you lose 50 ringgit. Okay, so that's the simplest way to understand this. Okay, next is we want to know the trading hours. What are the trading hours? Because you want to get into the market when that particular futures is in their trading hours, and different futures have different trading hours. Okay, so FKLI trading hours is not the same as FCPO, for example. Okay, so what's the trading hours for FKLI? It's actually 8:45 to 12:45. Okay, meaning that 15 minutes earlier than our stock market and 15 minutes late than our stock market for morning session, and afternoon session it opens together with the market, which is 2:30, and then it closed at 5:15 p.m. Okay, and the settlement is cash settlement, meaning that if you hold the contracts until expiry, but usually we don't do that. Okay, we don't do that. So this is just to let you know, and there are a lot more information that you can find on the BMD website for each kind of futures contract. So next, I want to introduce you FCPO, and this is also my favorite futures, okay, to trade in Malaysia. All right. So futures, FCPO, the underlying of this futures contract is crude palm oil. Okay, crude palm oil, and the contract size is 25 metric tons. Okay, so meaning that when you are buying, okay, one FCPO contracts, the contract size is actually 25 metric tons. Okay, 25 metric tons of crude palm oil. Okay, and then the price fluctuation is 1 ringgit per metric ton. The per tick value is 25. Okay, it's a little bit confusing, but let me explain. So for FCPO, let's say the price is 2500 right now, and you think that the price will go up. So you buy FCPO, meaning that you go long on FCPO contracts at 2500. Every tick it move up to 2501, 2502. Okay, so the multiple is one tick. Okay, 1 point. So every point it moves up, okay, you earn 25 ringgit because you go long. And every time it go against you by 1 tick, you lose 25 bucks. Okay, so 1 tick, 25 bucks. That's the most straightforward explanation I can give you. And trading hours, very important. Our FCPO opens at 10:30 in the morning and close at 12:30 p.m. All right, so meaning that you only got 2 hours in the morning sessions, and for the afternoon sessions, it opens at 2:30 and close at 6. So FCPO in total, the trading hours is actually shorter than FKLI. Okay, and settlement is physical delivery. So you do not want to hold your FCPO contract until expiry. Okay, usually brokers will remind you, okay, if you have a nice broker, but just make it a habit. Okay, don't hold until the contract expires. So the contract expires at 15th every single month. Okay, for FCPO. All right, so this information you can find on Bursa Malaysia website. Okay, every details you can find on Bursa Malaysia website. All right, so let's move on. Now I want to share with you 5 neat things, 5 great things about trading BMD futures. Okay, what do I like about trading futures? Okay, in Malaysia. All right, reason number one is the kind of leverage that you have. Now you might think that leverage is something not good, but if it is done right, the risk management is right, it is actually a very great option for people who have kind of limited capital to begin trading. Okay, let me explain. Example, let's use FCPO as example. Let's say the price right now is 2500, 2005. Okay, so the contract value is actually 2005 times 1, okay, because 1 tick is 1 ringgit times 25 tons, metric tons. So the contract value is 62,500 ringgit. And to trade one contract of FCPO right now, you need 5,000 ringgit. By the way, the required margin changes from time to time. So check with your broker for the latest required margin. Okay, I know that during MCO, some brokers, they actually increase the required margin because there are just way too many retailers are trading in the market. And I don't know, for some reason, some brokers actually increase it, the required margin. So check with your broker. So go back to this situation. Contract value 62,500 and you only need 5,000 bucks. Okay, 5,000 ringgit to trade one lot, one contract of FCPO. So the leverage ratio you get right here is about 12 times, 12.5 times if you want to be very exact. Okay, so, and the kind of leverage you're getting from futures. Now, when we talk about leverage, it's for sure the price your portfolio value volatility is going to be huge, just like you leverage to trade stocks. Okay, so it's the same thing. But one thing I like about leverage in futures is because the chances for you to lose a lot of money is actually less, okay, compared to I have met a lot of people who use limit, not margin, limit to contra stocks, penny stocks, for example. Okay, right now penny stocks is very hot, and a lot of people use limit. You heard all the T+2 thing, meaning that after 2 days you have to sell, something like that. Okay, it is even riskier to trade stocks, especially the lousy stocks, with limit. Okay, people tend to lose more money and all investment bank money doing that compared to futures. Okay, so the forced selling is usually more strict when it comes to futures. So you don't have to be very afraid. Focus on improving the way you trade. Okay, focus on improving the way you trade, your strategy, your money management, risk management, and mindset, and you will be good. Trust me. I find it more it's much better to trade futures rather than trade penny stocks. If you're looking for an active income from trading itself, okay, because there's few more reasons, and I'll explain. You will see why later. I'll explain along the way. Now, reason number 2 why I like trading futures is because in Malaysia you cannot short stocks. Let alone, don't talk about the IDSS, because by the end of the day you have to cover back. Okay, so you can profit from both direction if you are trading futures. If you think, for example, if you think that FCPO price will go up, you can long, meaning that you buy FCPO futures contracts. And if you think that, okay, example, you buy one lot of FCPO at 2,500, okay, that's the price. And then after that, when it goes up, you sell one lot, means one contract of FCPO at 2,520, you profit 20 ticks. You profit 20 ticks from FCPO. So the gross profit is 20 ticks and the per tick value is 25. So 20 times 25, your profit is 500 ringgit by going long one contract of FCPO. And how much do you need right now to trade one contract of FCPO? It's about 5,000. So about 10% gain from 20 ticks movement. Okay, and this is something that I really like about FCPO is you can pretty much get 10, 20 ticks every single day once you're experienced. Okay, so the volatility is there for us to trade. Unlike trading penny stocks sometimes, okay, like I used to trade penny stocks in the past, like 7-8 years ago. Sometimes the stock just don't get volume for a few days and you're just waiting, should I sell? How are like this? Okay, so for futures, you don't have this problem. And that is another reason why I like about trading futures in Bursa Malaysia. Now, if you think that KLCI will go down for some reason, the market is crashing, for example, you think that the market will crash, okay? you can short FKLI futures contracts. Okay, for example, you sell one lot of FKLI at 1600, 1006, and it goes down by 5 ticks, 5 points. Okay, so because you short, meaning that you sell to open a position, you have to buy back to close the position. So you buy back one lot of FKLI at, for example, 1595. Okay, so your profit is 5 ticks. So again, your gross profit is 5 ticks times 50 equals to 250. Okay, so that one is per contract. So that's reason number 2. Reason number 3, liquidity. Most futures products have great liquidity, especially for FKLI and FCPO in Malaysia. Okay, when we talk about the spot month for FKLI and also the third month for FCPO, when you are trading futures, okay, trade the most active month, which is usually the month, the contract with highest volume. Okay, with highest volume. This information you can easily ask from your broker and they will more than willing to explain to you. Okay, so for spot month of FKLI is actually the current month, meaning that right now, if you want to trade FKLI, you have to trade the June contract. Sorry, July, July contract. Okay, so if you were to trade FCPO, that would be 3 months from now, the third month. Okay, and there will be no issue establishing and closing positions, especially if you are trading the most liquid month, which is the most active month. That's the month with the highest volume. You just look at the list of the futures contract, the one with highest volume, highest open interest, that's the active month, if you don't know how to see. Okay, now reason number 4, why do I like about trading futures in Malaysia? Now, because you have multiple order types. Now, there are a few types of orders that you need to know. First, you have market order. Okay, it is a buy or sell order to be executed immediately at current market price. Okay, for market order, you have guaranteed executions, but the price is not guaranteed, meaning that if you were to buy, okay, one thing, the system will immediately tag the selling price. Okay, will tag the selling price and your order will be matched. Now, what's more important is limit order and also stop order. A lot of people do not know about this. In our stock market, we are primarily using limit order. Limit order is an order to buy or sell at a specific price or better. So for example, if you want to buy a stock at right now, the trading price is 5 ringgit. If you key in 4.95 because you want to buy better than the market price right now. Okay, so that's how we usually do in Malaysia market. Okay, because we want to buy better or sell at a better price. Okay, so that is limit order, and by default, okay, our stock market, equity market, we only have limit orders for most brokers. I understand that some brokers have stop order right now, but for most brokers, we still do not have. But for futures, you have limit order and you have stop order. So what is stop order? Stop order is an order to buy or sell a stock once the price of the stock reaches a specific price known as the stop price. That's a trigger. Okay, when the stop price is reached, a stop order will convert and become a market order. If the stop price is not reached, it's not being triggered, your order will remain dormant. Okay, it will remain dormant. So with the ability of placing limit and stop orders, it also means that we can place stop loss and target profit order. Let me explain further. Now, I'll demonstrate with 2 positions here. One is long, one is short. So for example, you go long on 25, for example, you trade FCPO. Your entry is 2500. So if you have entry, you must have a stop loss. So what you do is you key a sell stop order at 2490, assuming that your stop loss is 10 points. Okay, the sell stop order is actually a stop loss order, meaning that if the price were to go down and touch 2490. That sell stop order will convert into a market sell order and help you to sell and close the position, in this case, at the current market price. It could be 2490, it could be 2489. Okay, so by doing this, okay, this is what we call like sort of like an automatic stop loss. Okay, because people are scared. Sometimes you don't have the time to monitor and things of that nature. So this is something to protect you. Okay, and that's the reason I really, really like about trading futures in Malaysia. And how about target profit? So target profit in this case is actually a profit taking order, which is actually a sell limit order. For example, if FCPO price were to go above for 20 points at 2520, I'm going to just take whatever profit I have. Now, this thing, most of you might be familiar. For example, I think that Harta Lega will go to 20 ringgit. I can just Q sell at 20 ringgit. Okay, meaning that when the stock go to 20 ringgit, it will automatically sell, because that's how it works, the limit order. So you can use this as a target profit order. And I think this one, everybody is familiar. So the stop order is the one that I think is very important, because we must have a stop loss when we are trading things like futures, okay, or else things can easily get out of hand. Okay, so that's for long position. Next, we talk about short position. So for example, you short at 2400. You can, in this case, because you sell to open the position, you have to buy back to close the position. So what you can do to set a stop loss order by placing a buy stop order, okay, at 2410, meaning that if the contract that you are shorting go against you and go up to 2410, okay, to 2410, go up by 10 points, you lose money. And that's your stop loss. So the stop price is 2410. So once the stop price is hit, it will convert into a market order and help you to buy the contract. In this case, when it buys, it closes your short your short position. Okay, and profit taking order is the buy limit. Okay, so this is why I like about futures, because when I'm trading, especially FCPO, okay, I have my predetermined stop loss. Okay, and because sometimes it can move really fast. Okay, let's say for example, I can long 5 contracts. So I want to take profit 2 contracts at when the price go up by 10 ticks. I want to take another 2 contracts at 20 ticks, and another last contract for whatever reason, maybe I trail it. Okay, so you have a lot of flexibilities doing this, and everything's, if you know how to set it correctly, okay, this is going to be very nice. Okay, you will miss this feature, okay, after you know how to use it. Okay, because our fingers are not faster than setting these orders automatically in the system. Okay, so the next thing I want to share with you is low transaction cost. Okay, it's very straightforward. You pay for the brokerage fee only based on how many contracts you buy. Okay, and there is no things like for stocks minimum how many ringgit, then 0 point something percent. Okay, for futures, let's say if they tell you one contract is 10 ringgit, that's it. There's no minimum, no stamp duty, no clearing fee, no nothing, just the brokerage fee itself. Okay, just the brokerage fee itself. So overall, the transaction cost is very low compared to, let's say you want to day trade or contra stocks. That's at least for me, for my context. Okay, so these are the 5 things that I really like about trading in Bursa Malaysia derivative. Okay, trading the futures. All right, so now I have about, is it 25 minutes? Okay, so for the next 25 minutes, I'll be sharing with you how can you increase your income with futures trading. Now, there is no definite answer when it comes to this. It much depends on what type of traders you are. Okay, are you new to futures trading, or are you new to even stock trading, or you have been trading stocks and you want something that can increase your income in certain way? Okay, so I'm here to share with you a few solutions. Okay, a few solutions. You can do the brainstorm later how you want to make this works for your case, for your context. Okay, now the first thing I want to talk about is trading FKLI. And I believe that a lot of people in Malaysia, when they start trading futures, they will begin with FKLI because the underlying is the FBM-KLCI, and that's the thing that everybody understands. Okay, that's the thing that everybody understands and can relate, as long as you trade stocks before, or you are trading stocks. Okay, so the underlying of FKLI is our KLCI, which is the index that all Malaysia traders are familiar with. And there are few ways, okay, you can start looking into trading FKLI. Okay, now you can trade it just like other instrument with daily chart, meaning that you just want to ride the trend. Okay, if the index right now is in an uptrend, you want to ride the trend. Okay, and if you are a swing trader, you can also use this strategy, okay, to swing trade. For example, I will give you later, during the coronavirus outbreak, the flash crash, there's one trade that I have done, and that's the trade that I can share with you based on daily chart only. Okay, so that I think is one of the ways that you can profit from a crash in a bear market. Okay, and the pros of trading with a daily chart is that there is less noise, because market can go ups and down. There is less noise if you use daily chart. Okay, the cons is of course large stop loss. Okay, the cons is of course large stop loss. And the next you might want to consider is, if you have time to monitor the market, you want to swing trade with hourly candle. Okay, for FKLI, I personally do not use time frame, okay, charting time frame, which is smaller than 1 hour. Okay, so swing trade with hourly candle. And the great thing is, of course, higher potential income, and the cons is, of course, you gotta monitor a little bit. Okay, so let me share with you what are the ways that you can get this done. Okay, profit from the bear market. Let me just drop a pointer. Okay, now this is how I profit from a bear market. Okay, because that time basically I cleared my stock portfolio, and there's nothing much going on the stock portfolio, and I can make money, and you can too make money when there is a bear market happening. Okay, it's like some kind of crash. Okay, so here's the thing. So you see that this is a daily chart. You can see where I pointed right now is FKLI 1D. It means 1 day. Okay, one candle means 1 day. Okay, and you can see that it is trending downward. Okay, you can see that it's trending downward. So it goes down and down and down, and this is where the coronavirus thing starts to get more serious, and like we have MCO. Okay, beginning of I think was before the MCO. Okay, so it starts going down, and it depends on what kind of trading strategy you are used to, but I'll just share you mine. So in a downtrend, things does not go down in a straight line, just like uptrend. Okay, you trade whatever stocks, it goes up in an uptrend, but it does not go up in a straight line. It can retrace, meaning that you trade your top glove, you trade a Hatha Lega, it does not go up in a straight line until 20 bucks. In the middle, there are going to be a lot of retracement. So same things goes to downtrend. In a downtrend, things does not go down in a straight line. You see, it goes down, and it can have a short-term rally. and goes up, okay, close to the EMA, whatever EMA you are using, okay, and then it crash again, goes up, okay, and goes down, and here it goes up again, and here things start cracking, okay, it get down again, and then you can place an entry by trading a breakout, okay. In this case, of course, it is breakout towards the downside. So I open a position right over here, okay. I open a position right over here. Let me just move away my, okay. Okay, I open a position here at about 1444 and I place a stop loss above the high, because usually when you are trading stocks, you want to place your stop loss below the low. So when you are trading a short position, a downtrend, you want to place, okay, and order your stop loss should be above the previous high, which is somewhere around here. Okay, and it is also above the short-term moving average right here. Okay, so my stop loss is about 50 points, which is very big, okay, which is very big in this case. And then when I short here, it retraced for the next 2 days, and then after that, it just crashed. So when it crashed, one thing that I will usually do is I move my stop loss. Okay, I move my stop loss, in this case, downward. Okay, I move my stop loss from here to here, and then I just move every day it cracks down. Okay, I move down, and then after that, I exit at around this area. So the total profit, okay, the total profit in this case is 165 points. So this is what we call capturing a big move, because when market crash, it can crash very fast. Okay, you know that things takes like forever to go up, and when you want to crash, it crash in 1 week. Okay, so when you are trading a short positions, you have to be very quick, be very decisive. Okay, you're gonna know what's the right thing to do. Be very decisive and quick. So my stop loss is 50 points. So my stop loss is about 2005 in value per contract. The profit is 165 points, and times 50, you get 8,250. So that is profit for one contract alone. So if you can short one contract and make money out from this crash, you profit about 8,000. Is that a great thing? Does that increase your income? Okay, does that increase your income as a trader? If you have 10,000 ringgit to spare in the futures account, you can trade 2 contracts. Okay, so of course, from this type of trading strategy, you're going to be very certain. Okay, you need to have a little bit of certainty that the market has higher probability to go down. Okay, it has higher probability to crash in this case. Okay, then you can take such a bold move. Okay, so this is how we can profit from a crash in the market. Okay, so the risk to reward ratio is about 1 to 3. Okay, so definitely this is one of the way you can increase your trading income when there is a bear market. Okay, so as a trader, obviously we know that during this period of time, stocks are basically not doing well. So when stock market is not doing well, you don't want to force yourself to trade stocks. That kind of decision is not going against you. You are running upstate with an escalator which is going down. So it's going to be a very, very tiring thing to do. Okay, and very emotional challenging. So why not, when there is a crash like this, look at our index. Okay, look at our index. There's definitely going to be opportunity. Okay, you might say, hey, Jeen Hao, this stop loss is too big. Okay, is there any other option? Yes, sure, of course. There's other options. As I mentioned just now, you can swing trade with hourly candles. Okay, so what can you do in this case is, okay, sorry for the title, profit from a bear market, I forget to change, but this is an example of me sharing with you how you can actually profit from trading in a lower time frame. Okay, so forget about the title. The title should be swing trade with hourly candle. Okay, so you can see at the top left corner, it is FKLI 60. It means 60 minutes. So that's the hourly candle, hourly chart. So one candle equals to 1 hour. So again, depends on what kind of strategy you use. You can see that here we have an EMA crossover indicating that the instrument or the asset is trending upward. Okay, and then from here, when it cross upward, and you can see that this is actually a rebound. I like to trade rebound when it comes to stocks or futures. I like to trade rebound. So when there's a rebound, I can place an buy order, okay, to long, and then my stop loss is 12 points in this case. Okay, I want to place it below the previous low, which is somewhere around here. So I place it below the previous low. So my stop loss is 12 points, which is 600 ringgit per contract. Okay, 600 ringgit per contract. So when it goes up, you can see that it goes all the way up and it starts to turn down. So this is when I want to sell, I want to take profit, okay? Because this is one swing. This is one swing, and when it turns down, it starts to break previous candle and break previous candles again. I know that the trend might be over for this swing. So what I want to do is I take profit. Okay, of course, you can also take profit when it move up like 20 points. For example, you want a risk to reward ratio of 1 to 2. You can take, maybe if you long 2 contracts, you want to take profit for 1 contract first, and another contract you just trail it. Okay, this one is entirely up to you, but I'm just sharing with you. This is one of the way that you can do swing trading FKLI contracts with hourly chart. Okay, whatever strategies you are using in trading stocks, whatever EMA, MA, or you use MACD, RSI, stochastic, Ichimoku, okay, you can place it in FKLI in hourly chart. Most of them will still work. Okay, so again, after that, you see that it pulls back to this area and it goes up again. This is actually where you can start establishing a long trade, a long position. So it goes all the way up and comes down again. It does not break previous low. You might want to continue to hold on, okay, or you can even top up, okay, because you are in profit already. Okay, so again, this is one of the ways, okay, that I like and I prefer if you want to get started in trading FKLI. Okay, look into the hourly chart and use whatever your current strategy is. If that strategy is making you money in the stock market, okay, you use it in FKLI hourly chart. Of course, you back test first. Okay, you back test. If you follow this, are you going to make money? If you're going to make money, you can start trading with maybe 1 contract at your own risk appetite. Okay, 1 contracts, 2 contracts, 5 contracts, up to you. Okay, I'm not the one who decide how many contracts you should be trading. Okay, so again, for whatever strategies you are using to trade stocks, okay, back test with this FKLI. That's something that you can actually get started right now. Okay, so again, in this case, the stop loss is 600 ringgit or 12 points. The profit is about 70 points or 3,005. Okay, risk to reward ratio 1 to 5. 1 to 5.8 in this case. Okay, so this is one of the ways that you can profit, okay, from the market. For example, if you know that you miss Top Glove and Hatha Lega, okay, what can you do? Maybe you can trade FKLI, because right now Hatha and Top Glove, they are waiting out. Okay, they weight very heavily. I think it's around 30% or more than that in our FBM KLCI, because our FBM KLCI is a market cap weighted index. So the larger your market cap, okay, the larger your market cap, the more you weight in for the index. So right now, the 2 glove counters, okay, Hatha and Top Glove, they weight very heavily in our index. So these 2 stocks, if they were to go up, okay, our index will most probably go up, unless like the bigger market caps like Maybank crash, for example, then that might be ease off a little bit. Okay, but right now we are seeing that If the two stocks, the two glove counters, okay, the Hata and Top Glove are going up, the index will go up. If they are crashing, the index will crash. So again, let me give you a very quick I just say, it's not tips, it's just something that I think I have in mind, okay? If you think that the glove rally is not sustainable, if you think that lah, okay, if you think that the glove rally is not sustainable, one thing you might have opportunity is one day if Hata and Top Glove were to start turning down, meaning that the rally, the glove rally is over, if they were to turn down, what do you think it will happen to the index? Okay, because they weigh very heavily in our index right now. So if the glove rally were to stop, okay, what do you think will happen to our FBM KLCI index? Do you think you have an opportunity right there? Okay, I won't tell you when it will start turning down, but in my very personal opinion, okay, again, disclaimer, in my very personal opinion, it will be time that things will start to get weaker and weaker, and eventually when people take profit, it is a matter of time it will go down. But nonetheless, right now it is still bullish, okay, in my opinion. So if you think that it is not sustainable over the long run, at a certain point of time, you might have an opportunity to actually, I don't know, place a short trade, okay, for FKLI. That's what I'm waiting for as well, because I make money when the glove is going up. So when the glove is coming down, how can I profit? Okay, FKLI might be one of the choice, because you cannot place a short trade. Okay, I don't want to talk about IDSS, but a legit short trade. Okay, if I were to profit from a crash of the glove, if it were to happen, shorting FKLI might be one way to go. Okay, this is just sharing my opinion with you guys. Okay, if only if you believe that the glove sectors, okay, will not go up forever. Okay, you think that it will turns into a downtrend, or it will just turn down at a point of time in the near future. Okay, so now if you are into day trading, okay, I would say that FKLI is good only when there is a good uptrend or downtrend, meaning that during market boom or crisis. Now, if you can recall what happened in the past few years, because recently, like last year and this year, markets is a little bit more volatile than before. Okay, market is a little bit more volatile than before. If you can still recall, okay, our FBM KLCI usually one day, it is very rare to see FBM KLCI move more than 10 points, be it upward or downward. It's like sometimes you see the FBM KLCI go up 3 points, 2 points, 5 points. If it only goes up 5 points. It is very tough for you to day trade. I don't think it is a great instrument to day trade. Okay, because if the market only go up 5 points, you can only maybe capture 2 to 3 points. It's like 150 ringgit, and I don't think that it is a great profit, okay, in my very personal opinion. So now, again, it is rare to see FKLI move more than 20 ticks per day, but on the other hand, it is very normal for FCPO to carry more than 50 ticks of movement in a day. It can be like 30, 40, 50. Even if it is 30 points, it is more than enough for you to make handsome profit from FCPO by day trading. Okay, so but the concern a lot of people will have is the concern FCPO get almost every single day, meaning that they will get upward like 10 points, okay, 10 points, 20 points, okay, sometimes they even get like 30, 40 points, okay. It's very crazy if you hold position overnight for FCPO, and I don't encourage that as well for beginners. So FCPO provides enough volatility for you to intraday, and when you are intraday trading, meaning that you are day trading, you are actually avoiding the gaps. Okay, so how cool is that? Okay, how cool is that? So to avoid gaps, you don't hold overnight. Okay, and the intraday volatility is very sufficient for us to profit from FCPO day trading. So if you're looking into FCPO day trading, if you're looking into day trading, I will recommend you to look into FCPO. Okay, so getting started with FCPO day trading. So the required margin right now is 5,000 ringgit per contract. So you give yourself at least like 1,000 to 3,000 of buffer, meaning that you don't deposit only 5,000 ringgit to trade one contract, because if your first trade is going to be losing, then you will get margin call. Okay, so leave like 2,000. So maybe you put like 20,000 and you trade like 3 contracts, something like that. Okay, so this is the first thing. Okay, second, the stop loss is usually about 8 ticks to 10 ticks. So 8 ticks will be 200 ringgit in value, and 10 ticks will be 250 ringgit in value. So that is the risk level per contract. Okay, and the first target profit is usually, for me, I set 10 ticks. Second target, 20 ticks. Okay, and for those who know me, okay, you know that in the stock market, I'm a trend follower. So if you want to learn more about trend following, okay, you feel free to follow me. Okay, when I'm in stock market, I'm a trend follower for sure. Okay, so because my background is trend follower, I usually leave some contracts for trailing, meaning that when it goes up, okay, for 10, 20, 30 ticks, I will usually still leave like 1, 2 contracts to trail. Okay, that is when you are trading more than one contract, then you can do that. Okay, just in case like one day FCPO go up 60 point, 70 point. Okay, so you leave the very last 1 or 2 contract to trail all the way up. So start slowly from 1 trade a day. Okay, so if you trade 1 trade a day, I will suggest you to trade the morning session. Usually the first opportunity will appear in the first half hour of trading. Okay, so let me share with you. So the first candle that you see, by the way, when I'm day trading FCPO, okay, I'm using 5-minute candle. So what you see right here, the first candle is the market open that candle, okay, 10:30. Okay, so first candle, you can see that the market goes up, FCPO goes up. Now again, I don't see the gap. Okay, the gap doesn't matter to me. So first candle, it goes up, second candle goes down. So the next thing you want to know is this chart is, I think was like few days, like last week, July 15. Okay, July 15. July 15 is last week. Okay, so again, FCPO right now is in an uptrend. So when FCPO is in an uptrend, I'm usually long bias, meaning that I'll more lean forward to trade anything that is a long setup. So you see FCPO, the first candle, it goes up and retrace. So in my mind, I know already, okay, you retrace, but FCPO, the primary trend is an uptrend. So I'm more long bias. So if you were to rebound, I will enter. If you were to go down, of course, I will do a short trade. Okay, if it goes down to this level, okay, I will do a short trade. So again, it rebound, I open a position, set a 8-point stop loss. Okay, 8 points of stop loss, and you can see that when you put 20 points, the first level is 10 points. Okay, if you put 10 points, one contract, take profit, another contract at 20 points, take profit in 1, 2, 3, in 3 candles, you will take away 20 points profit. 3 candle, 1 candle, 5 minutes. So in 15 minutes, for every contract you long FCPO with this setup, you are making 500 ringgit of profit for one contract. One morning, you spend like half hour looking at FCPO, make 500 ringgit per contract. How good that is. Okay, especially right now, FCPO has a nice trend. Okay, FCPO has a nice trend right now. It presents a very good opportunity to trade. Okay, I will prefer when FCPO prices go up, I will prefer to trade FCPO rather than trade plantation stocks. Okay, so it's my personal preference. Okay, because if I look at plantation stocks, I have to look at a lot of plantation stocks, and every company subjects to their own company's risk. But FCPO, I just look at one single thing and I focus in it. Last year, October, somewhere around there, FCPO is also in a rally. And during that time, it's a great opportunity to trade as well. Okay, I grew my portfolio more than 100% in 2.5 months time during that time. So with the right knowledge, you can definitely do that. And when the trend is very nice, okay, definitely it is a good opportunity for you to do that. Okay, so now that is trading one trade a month, a day. How about once you have gained a little bit of confidence, you want to trade the afternoon session? So again, in this example, you can see that, okay, it goes down first candle, but overall still uptrend. And when it goes up, you buy. Okay, you go long, set an 8-point stop loss, and it goes up, first target hit. Before the market close, if it does not hit 20 points, meaning that it hit 10 point only and hovering around there, you close the position before 12:30. Okay, you close position and take away 250 ringgit of profit per contract. Nice. Afternoon session, you can see that it gap up on the afternoon sessions. Okay, it goes up and retrace, and it go up again. So when it goes up again, you can trade again a rebound, go long, set an 8-point stop loss, and it goes all the way up to 30 points of profit. So if you know how to trail, okay, if you are a trend trader, you definitely know how to trail. If you can take 30 points of profit, okay, that is 750 ringgit per contract, and one day is 1,000 ringgit per contract. Now, my maximum record, my maximum record is clocking about 60 points in one single day. Okay, that is the maximum that I have at least. Okay, and it's kind of crazy. Okay, but of course, if you're day trading, expect that you have to monitor the market. But again, I've shared with you all the options that you have to get yourself started with trading futures. Okay, you can trade FKLI using the day chart, or swing trade using the hourly chart, or if you are into day trading, look at FCPO. Okay, definitely there is enough volatility for you to trade. So that would be the end of my presentation. Okay, so I think I'll pass the session back to Shane. Hello, are you there?
Yes, thank you so much, Jin Hao, for your wonderful sharing on FCPO and FKLI. And today we learned about what are the basics to futures, and we also learned about 5 neat things about trading futures, as well as what are the possible strategy that could be used in FKLI and FCPO. Now, if you have any questions to ask our speaker today, Jin Hao, please type in the Q&A box, so we'll be able to address your questions. Of course, please write your question in full sentences so that we'll be able to understand your questions, and we'll pick your questions if your sentence, if you write in a full sentence. All right. Or many are saying great sessions. Now, the first question is trading futures same like trading options?
Okay, futures and options, they are different things. Okay, so definitely they are not the same thing. Okay, and if you want to think about option, they will be more like our warrants. So definitely they are two different things. They are both derivatives, but totally different thing.
Okay. Now, how about Sharia aspect of the futures contract?
Okay, this one you can check at BMD website. Okay, so they are Sharia compliant.
Okay, let me further clarify, answer these questions. FCPO is Sharia compliant. FKLI is not Sharia compliant, because KLCI composed of companies that are non-Sharia compliant. Yeah. So if you want to be Sharia compliant, you can only trade
FCPO.
FCPO. Yeah. So for our Muslim friends, FCPO is your choice. Okay. Don't do FKLI. All right. So do you trade gap? That's the next question. Do you trade gap, and how do you do back test strategy? That's by Cheng.
Okay, because I cannot see the chat. Yeah. Okay. So I do not trade gap. Okay. For myself, I do not trade gap. For FCPO, okay. For FKLI, I just leave it overnight. Okay. So for FKLI, I leave the position overnight. For FCPO, I don't. Okay. So to back test strategy, I myself actually use what I call the manual way. Okay, the manual way. So before you want to test a strategy, I will do back test, that's the first thing, and I will also do forward test, meaning that for the first 1-2 weeks, I don't put in money, but I just paper trade. Because that's what I call forward trading. Okay, so that's how I do it manually. I don't use like system and all those things. Yeah.
All right, understand. So next question is by Samuel. Do you know which platform has OCO order?
OCO order, okay. Let me just ask, is it meaning that your stop loss is hit, then you want to cancel your profit taking? Something like that.
Yes. Samuel
Okay.
say yes.
Okay, so I'm using what we call a CQG, okay, meaning that it is actually a third-party trading platform that provided by Philip. Okay, so from my understanding, there is OCO. Okay, and you might want to check with your broker because some brokers they have different trading apps or platform for you to use.
Okay. Next question come from Scott. Like, which platform can we trade futures?
Basically, you mean trading futures? You can just go to any futures broker like Kenanga, Philip, RHB, yeah.
Yeah.
So they have their own
Just,
platform, and then they can also have like third-party
yeah.
platforms.
Yeah. Just to add on, the your CDS account does not allow you to trade futures. Okay, you need a separate trading account. Yeah,
Yeah,
you need to open a separate trading account with a licensed futures broker, such as the ones that mentioned by Jin Hao. Okay, if you need me to link you to any broker, you can reach out to me on Facebook. I can share with you. All right. The next question comes from Bill. Could you present the strategy slide number 4 that shows setting limits long and short?
Limit, long and short. Slide number 4, which is the multiple order types. Is it multiple order types?
I guess so. Bill, would you want to yes, he says that's correct.
His question was?
Could you present the strategy on this slide that shows setting limits?
What do you mean by strategy?
I guess maybe it's limit orders.
Okay, maybe I'll use the chart. Okay, I'll use the chart. Okay. So do they see my screen now?
Yes, we're seeing your screen.
Okay, so let's just quickly go through. So this one is the multiple order types. Okay, so meaning that when you're going long, you enter at 2005, for example, you set a sell stop as a stop loss, a sell stop order at 2490. That means you have to go into your broker platform and key in a sell order and choose the stop order. Okay, because by default it's all limit. Okay, you choose a sell stop at 2490 and you can key in another sell limit at 2520. Okay, sorry. So let me just give you an example with this trade. Okay. For example, okay, you are entering this position at this level, which is the line here at 2430. Okay, the line I'm pointing at right now. So my stop loss, okay, 2430, when I enter FCPO, is always at points below my entry price for long setup. Okay, so meaning that after I buy at 2430, I will set a sell stop order at this stop loss level. This is my predetermined stop loss, which is in this case 2422. Okay, and then after that, I will set my first target profit order in a sell limit order. So meaning that I key in a sell limit order at 2440, which is 10 points above whatever predetermined profit taking level that you want to set. So that's how basically you key in the you key in the order, okay, in your futures platform, trading platform. Hope that clarifies a little bit.
Yes. Okay. Well, there are a lot of questions on brokers, so I just want to clarify that each broker I think their platform are different.
Brokers,
Yeah.
broker specific issues. I think that I don't try every brokers per se. Yeah, so
Okay. Yeah. So brokers, I guess you have to check with our speaker is have not tried all brokers. Neither have
yeah,
I have tried all brokers, but I guess different broker have a different unique trading platform.
yeah, and it's
So
a little bit more different across different brokers. It's
yeah.
like there is a learning curve when you switch from one trading platform to another. The learning curve is, I think, larger, okay, compared to like switching in equities.
Yeah,
Yeah,
but essentially, because equities they are mainly end-to-end Excel force. These are two
yeah,
dominant
yeah,
software provider. But in futures, they are vastly different because some
yeah,
brokers can really allow you to build a lot of stuff. Okay, like algo. Okay, some broker
yeah,
allow you
yeah,
to
yeah.
build algo with their revolutionary software. Of course, if you have such a sophisticated software, there will be subscription fee, and then there will also be an inactivity fee if you do not trade, if I understand it correctly. So
Yeah,
if your account becomes dormant,
I
yeah, go ahead.
personally use a third party one. So there is actually extra charges every time you place an order. But I like the platform, so that's why it's okay to, for every trade that I place, they're actually charging me extra, like a little bit, few cents, not few cents, like 20 over cents. Okay. So every
Yeah,
trade yeah.
yeah. So the more sophisticated your software, the broker able to provide to you, then the higher they will charge you lah. Okay,
Yeah.
so if you become active, then of course, I mean you actively trade, then it will become more justified lah. If you don't trade,
Mm,
right, then I guess the cost will be very quite high lah. Okay, so
mm.
these are, I think this covers all brokers. So of course, if you need to link up with futures broker, you can also reach out to me on my Facebook. All right, so let me pick the next question. A lot on brokers. Uh, do you have any recommendation in terms of material to read or studies in terms of futures?
I don't really have materials because the way I learn is actually to flip the chart myself, and then the first stage in my learning curve is actually apply whatever my stocks strategy into futures, and then I tweak a little bit here and there, and then I actually learn from experience per se. Yeah, so material wise, I cannot suggest any because I don't read and learn futures.
Hmm. Okay. Let me add on
Yeah,
because
do you have any?
sure. I
Yeah.
personally would want to suggest that you go to Bursa Academy. On Bursa Academy, there are also materials in the form of quiz, in the form of text, and also in the form of videos and webinars. You can go there and find. Go to Bursa, just Google Bursa Academy. This platform is recently developed by Bursa Malaysia. Bursa Malaysia spent resources to make this platform for you. So go there and find the futures materials, and you'll find that some of the materials are developed by our company, LifeChamp. So you can go there and study that. Anyway, these are all free of charge. Okay, next question is, can we use volume and open interest to do day trading? This is from Luis.
Okay, for me, I don't look at it when I trade because I purely look at like charts. I don't look at open interest and volume. That's my personal way of trading futures.
Okay, no problem. What resources do you use to do FCPO day trading, like chart software, news portal? This from Mr. Lim.
Okay, I don't really look at news. Okay, I'm the kind of person when it comes to trading, I look at charts purely. So for FCPO, okay, if you're mainly trading FCPO, okay, when I'm trading, I'm actually relying on the charts provided by CQG, which is actually the trading platform that I use. Okay, so they have like charts enough for me to make buying and selling decisions. And when I want to do like what we call the overall market analysis and things of that nature, I will use TradingView. It's free, by the way. Okay, you just have to bear with the annoyings like pop up and all those things. Okay, and some of your brokers will provide charts as well. Yeah, and I used to use another Chinese software called Wenhua. They also have like charts for you to use. And Wenhua, TradingView, they are both free.
Okay. All right. So the next question is FCPO related to the soybean market?
Yes, it's somewhat related. But of course, you can trade FCPO alone as it is, because if you are day trading, it really doesn't matter much.
Okay. Hang on, yeah, I'm sorting through all the questions. I've heard about a product called single stock futures. Can you elaborate a bit on this? Is it suitable for beginners? This is from Yu Harith.
Okay, I believe that we have single stock futures webinars coming up. Okay, for single stock futures, it is actually futures for single stock, as the name already suggests. And one thing about trading single stock futures is actually that you need to know is right now in Malaysia, the open interest is still not a lot, meaning that the liquidity is not really there. So when you are trading single stock futures, you want to make sure that you are not the kind of fast in, fast out. Okay, if you want to day trade single stock futures, I can say that it might not be a good option. Okay, might not be a good option. So the first thing is, of course, it is not as actively traded as FCPO or FKLI. Okay, so if you want to look into day trade or swing trade, maybe you want to look into FKLI instead, okay, of single stock futures. So single stock futures, I would say that like right now, Top Glove and Hartalega is like shooting up. That might be an option that you want to look into. But
Okay.
for normal times, I don't think it is really a good, like, it might not be the best choice for times that whereby the stock is not booming or crashing.
Okay. The next question is, in IDSS, which is intraday short selling, traders are required to cover the short positions in one day. In shorting futures, is there any time period to cover the short positions? This is from Yi Chen.
No. As long as the best practice is actually you close the position before the contract expires, I think that would be all good.
All right, unless you want to take delivery of the crude palm oil if you're trading
Yeah.
FCPO. Okay, so well, what is the minimum amount do you think a trader need to have before we can trade FCPO?
For now, I would say like 6,000-7,000, because the required margin, as I last checked, is 5,000. So I would say that you leave like 1,000-2,000 buffer, so it could be like 6,000 to 7,000.
Yeah.
So meaning that if your stop loss is like 10 points, 10 ticks, if you have 6,000, meaning that the maximum stop loss you can have in a row is like 4 before you get margin call.
Actually, I think the FCPO margin is revised downward to 4,005.
4,005 already, yeah?
Yeah.
I last checked was 5,000.
Yeah, recently, I think a couple of weeks ago.
Yeah.
Okay, how can I identify trend is uptrend or downtrend by first looking at the first candle from the morning session?
Okay, you can, I assume this is for FCPO. Okay, I talk about FCPO every time I forget about the other futures. Okay, so for FCPO, the first thing is before the market open, you have to identify the trend. For example, you look at the daily chart. Okay, you look at the daily chart and see whether or not it is in an uptrend or it is in a downtrend. The next thing is, of course, you want to look at maybe hourly chart. So when you look at hourly chart at a glance, for the past few days, is it upward trending or is it retracing in that context? Now, I'll give you an example. If you look at daily chart, okay, if you look at daily chart, it might be in an uptrend. But if you look at hourly chart for the past maybe 3 to 5 days, it might be sideways or downward movement. So that is like for the past 3 to 5 days, it is retracing, but overall it is still in an uptrend. So you need to have these kind of things in mind, okay, before the market opens. So the gap direction actually doesn't matter. You have to know that if the primary trend is still uptrend, okay, and the secondary trend, which is usually when you look into the hourly chart or 15-minute charts, okay, is maybe in an uptrend as well. So it means that FCPO is very bullish. So meaning that in this context, there are two things that I will know. The first thing is I am long bias, meaning that I will take larger long positions as opposed to short. The second thing is I want to be very careful at the top. Like today, the FCPO actually hit a few times resistance and then comes down. So when it has been an uptrend for like 1 week, 2 weeks, you might need to be very careful with any kind of resistance. So you cannot be like first candle, you decide whether it's up or down. You have to look at the first is the primary trend and as well as the secondary trend. Yeah.
Okay. The next question is from Lim is that what is the average ticks or return a full-time FCPO trader can expect?
It depends on the way you trade. Okay. I would say that if on average, okay, on average, 1 week, you can get like 30 to 40 ticks, it will be very good already. 1 week, 30 to 40 ticks. Net, meaning that gain plus stop loss. Okay. So net off, you can 30 to 40 ticks, depends on how much capital you have as well. But I think that 30 to 40 ticks a week net gain in terms of ticks is a very realistic goal to set if you want to be a day trader in FCPO.
Okay, so this is questions from Richie. He says that is it wise to put stop order, as this will put you in disadvantaged position as some superpower will tend to close your position?
Okay, for me, stop order as in stop loss, right? There are a lot of people actually believe that there are people around behind the scene will see where you put your stop loss as. I personally don't really believe in this. If the trade has already going against you, I'll just put a stop loss as a safety measures. Okay, that's a practice that I give myself whenever I trade anything, be it futures or stocks.
Okay.
I don't think that's a disadvantage, lah.
Yeah. Okay. Now, how do you paper trade in which platform? Like just now you mentioned about forward testing.
The simplest one, I don't use any platform to paper trade. Okay, I just write down, I will enter here, and my stop loss is here. And when during the afternoon session, I'll just go and check back. If I place a stop loss here, did I hit my stop loss? That's the simplest thing you can do. Okay.
Okay. This question's from How. In the share market, there's buyer and seller. There's matching between buyer and seller. So in future trading, how to match? So that's the question. Who is the buyer? Who is the seller?
Buyer will be those who go long or those who want to close their short position. And if they are using limit order, then it will show as an open interest. It basically works the same as the stock market actually. So the sell order, the queues that you see would be people who are interested in either closing their buy position or they want to establish a short position. So as long as there is any limit order being placed in the market, you will see it as a queue, just like the stock market.
Okay. The next question is, looking at the slide that you trade in the morning sessions, I want to know if I reach 10 points, even though it only takes 5 minutes, can we close the contract? This is from FND.
Yes, you can. And sometimes because the first target you put is 10 points, depends how many lot you trade. Because if you only trade like 2 lots and you put if you use sell limit order, okay, as a target profit order, it's too fast. When you hit, you are out from the trade already. Sometimes it's too fast. So it depends on you, okay, whether or not you want to set a sell limit there as a profit target, or you want to. There's another one that you can do is if you're monitoring the market, you can move up your stop loss. You move up, move up, move up, move up. There's also another way of doing it. And it doesn't matter. Let's say, for example, you think that during the morning, in 10-15 minutes, it has already gone up by 10 points. You want to take profit, is entirely up to you. You can also trail. For example, you think that is too fast and it can go higher. I believe that what you want to ask is this. I can suggest you one thing is, for example, you put your initial target profit as 10 points. Okay. And then what you can do is, if you think that it's going up too fast, you can revise your target profit to 20 points and then you move your stop loss upward. That would be the right thing to do if you think that there still have more potential, but at the same time, you want to protect yourself. Did I
All
answer your
right.
question? Yeah.
All right. So I guess that conclude our Q&A session. So let me just take a minute to share with you what is the next webinar. Thank you so much for staying on. I will give. I've just put in the next webinar link in the registrations in the chat box. So the next webinar, it will be on pengenalan kepada pasaran niaga hadapan. It will be done in the bahasa Melayu. So if you would like to learn what is futures market in the BM, so we have another speaker who is coming on board to share with you how do you trade the futures market conducted in a BM. So it will be taking place on the 28th of July, which is exactly 1 week from now, 28th of July, Tuesday, 8:30 to 10 o'clock. So the registration link is already put in the chat box. So hurry up to register if you want to attend another sessions by another speaker on pengenalan kepada pasaran niaga hadapan. All right. So if any more questions, I think that many of you are saying that it was a very fruitful session. So thank you very much. Thank you, Jin Hao, for sharing with us some nugget of wisdom when it comes to your strategy in trading FCPO and FKLI. So the summary is that if you want to do day trading, you do the FCPO, because FCPO has more movement, okay, in one single day. And if you want to trade the trend, then you can use FKLI. Now, of course, if you want to do hedging, if you already have a long positions in the stock market, if you want to do hedging, you can open a short positions in the futures market, so to give you some short exposure for you to hedge your portfolio. So this is my personal opinion. All right, so hurry up to go to our registration link to register for our next webinar. And with that, thank you so much everybody for attending our webinar today. So thank you, Jin Hao, for sharing your idea with us today, and I hope that you all have a fruitful evening with us in our Let's Learn Futures webinar, brought to you by Bursa Malaysia Derivative. Bye everybody.
Okay. Is it true that I cannot view their chats?